Last quarter, the domestic equities were up, and this is sustained. So just a little bit of context, the last 5 years, the domestic equity market was really challenged, a lot of structural issues, earnings issues as well. So we saw it really underperforming and sustained underperformance. So now we've seen that tide turn. The last 3 quarters, the DCI has been positive, so that positive momentum is being sustained. However, within that momentum, we're seeing very diverse performance. So you have 2 or 3 companies that are just knocking it out of the park, and then you have others that are lagging for different reasons. I mean, during the state of public emergency and the events that unfolded after that, we've seen certain sectors like tourism almost being non-existent. They've been really, really trumped, and their performance is reflective of that. However, you've seen the banking sector, a mixed bag of performance in terms of earnings. You've seen some doing really well because of non-recurrence in some impairments and sustained fee revenue that has sort of helped them weather the low interest rate environment, and others doing not so well. So it is quite a mixed bag of performance within the financial services sector. We've seen diversified financials doing quite well and sustainably so, and that performance is expected to continue. So like I said, there's a variation in performance, but the general theme is a recovery. Last year was really a recovery year from some of the measures that we saw in place being taken away. We anticipate that this year will still be sustained growth. However, the advent of inflation will constrain some consumers, so consumer discretionary stocks might still be under pressure. We've seen properties hold up very well. We anticipated back in 2020 that they would take quite the hit, and we've seen that they've been able to sustain themselves, and going forward we expect that positive momentum to also continue. So going into this next quarter again and the rest of the year, there's still going to be quite a divergence in performance, with certain sectors doing better than others. However, overall we expect the DCI to continue with this positive momentum. Sentiment has changed as well because of the turn in performance. So we're seeing now investor sentiment being positive for domestic equities, and that demand will also underpin and support prices in the near term.